Hello and welcome back to our journey into the realm of German taxes. Today we are exploring the fascinating world of personal income taxes for private individuals and self-employed people like myself. Covering categories and sources of income, we will look at types of taxes, allowable expenses and deductions, as well as the tax rates for the various types of taxes we have here in Germany. This, I promise, will be an informative episode. My name is Uyafe, your financial advisor, and welcome to Uyafe on Money. This channel is a medium to inform and educate expats and immigrants in Germany about personal finance. Hopefully, you will learn something new from every video that I will upload, become more curious as a result, and look for more ways to improve your personal and household finances. Remember, Uyafe is not a tax advisor, but your friendly guide into the tax jungle as it relates to your financial planning decisions. To start with, let's talk about the categories of income that are considered for tax purposes by German law. The tax system in Germany identifies seven different categories of income. These are income from agriculture and forestry, trade or business, self-employment, employment, capital investment, renting and royalties, as well as other incomes as defined by law from time to time, for instance, right now, including lottery winnings. Basically, if whatever you're doing brings you profit, it's likely to be considered taxable income. Now, how about from where you get your income? So to say, your sources of income. Does that matter in determining your taxable income here in Germany? The answer is actually pretty simple. It depends. It depends on whether you are considered resident in Germany or not for tax purposes. If you are not resident in Germany for tax purposes, that means you have limited tax liability, or in German, beschränkte Steuerpflicht. Only your income stemming from Germany and listed in the income tax law is subject to tax. I'm repeating this one. Only your income that comes out of Germany and is listed in the income tax law is subject to German tax. If you are, however, tax resident in Germany, you are considered to have unlimited tax liability. In German, unbeschränkte Steuerpflicht. And both your income generated in Germany and those generated outside of Germany from all the categories mentioned earlier are taxable. That means they are considered for tax purposes. However, the extent to which your non-German income will be taxed will take into consideration the provisions of any double taxation agreement between Germany and the source country from where the income comes. For example, you live and work in Germany here, but also have significant financial investments in the UK. When you file your taxes, your employment income and your capital income from the UK will both be considered for tax purposes. Well, what if I don't declare that income from outside Germany? Who will know? No one will know, so no need to pay taxes on them, right? Sorry to be the bearer of this news, but you cannot hide your worldwide capital income in Germany. Since 2017, there has been an automatic exchange of information between Germany and, as of this year, 2023, 115 countries on the capital income that German residents, as in people who live here in Germany for tax purposes, and in those countries. So, capital income taxes can have a significant impact on your overall investment return. So I take this personally into consideration when recommending investment options to my clients. Now, what kind of taxes do private individuals pay in Germany? Well, on top of the normal income tax, the other main taxes we have include the church tax, the solidarity surcharge, the capital gains tax, property tax, and inheritance and gift taxes. And if you are self-employed, don't forget there's also the business tax, in German the Gewerbesteuer, and the value-added tax, the Umsatzsteuer. There is also the social insurance contributions that employees and certain self-employed people have to pay. Some consider this as a tax, whilst others do not. Now, to the extent that these contributions work as an insurance product with defined benefits upon the occurrence of a defined event, this works now like any other insurance product, and so the contributions can be considered as premiums. However, to the extent that people are forced by law to make contributions and cannot opt out, these then definitely behave like taxes. Now let's talk about allowable expenses and allowable deductions. These really can be a godsend, helping you lower your taxable income. They include costs that are directly related to your work, like travel costs, business literature, professional dues, and work equipment. Allowable personal deductions could also include social insurance contributions, private insurance premiums, alimony payments, childcare expenses, education expenses, mortgage interest, and even some special expenses like donations to religious organizations. If you are self-employed, then your business expenses are also deductible. Now, when we talk about business expenses here, we are talking about those expenses incurred directly in the course of generating your business income. Basically, when you think about allowable expense and deductions, say if it's necessary for your work or to generate income, it might be deductible. All right, let's move on to tax rates. Personal income tax rates in Germany are progressive, like we talked about in our previous episode, ranging from 0% for subsistence earners all the way up to 42% for high income individuals. The applicable tax rate is determined geometrically by applying this formula. There is also a rich tax of 3% for those earning above 277,825 euros per year filing alone, or for those earning 555,650 euros filing jointly as a couple for 2023. Now, this amount changes year to year. How about the solidarity surcharge? In German, the Solidaritätszuschlag. Now, that's an extra up to 5.5%. Good news is the solidarity surcharge now only kicks in if you earn more than 73,000 euros as a single person, or 151,000 euros if you file your taxes jointly. The solidarity surcharge is only calculated on your assessed income tax, not directly on your income itself. A lot of people make that mistake by thinking that the 5.5% is applied on their taxable income. It is only applied on the income tax payable. When we talk about income from capital, we are referring generally to interest, dividends, and gains from the sale of securities. Now, all capital gains received by individuals must be declared as part of their income tax filing. However, there are two important points to note about the capital gains tax. In German, the Kapitalertragssteuer. The first is that income from capital is subject to a final withholding tax rate of 25% plus 5.5% for the Solidaritätszuschlag or the solidarity surcharge. This also applies to deemed capital gains on investments in accumulating funds. These are funds that don't pay out the returns on the investment that they've done, but reinvest it into the fund. The rate on the deemed capital gain in the accumulating fund is albeit at a lower percentage compared to the flat or final withholding tax rate. The second is the tax-free allowance on capital gains. In German, the Sparerpauschbetrag. From 2023, this allowance is 1,000 euros for singles and 2,000 euros for couples. You only pay taxes on the portion of income from capital that is more than the allowance. But of course, you have to take advantage of it. You can take advantage of this allowance by issuing your own financial institution with an exemption order, the so-called Freistellungsauftrag. The allowance can also be divided among multiple financial institutions so that if you invest through multiple financial institutions, you can divide your allowance across these multiple financial institutions. Church tax. What you pay for church tax depends on the state in Germany you live in. The church tax is 9% in all German states except Bayern and Baden-Württemberg, where the rate is 8%. Just like the Solidaritätszuschlag, the solidarity surcharge, the church tax is also calculated on assessed income tax and not directly on your taxable income. According to the institute, the Deutschen Wirtschaft, a research institution here in Germany, in 2022, an estimated total of 12.9 billion euros in church taxes were collected and distributed to the Catholic and Protestant churches. About 6.8 billion to the Catholic Church and about 6.1 billion to the Protestant Church. Every property owner in Germany is liable to pay the real estate tax, the Grundsteuer. By property, we are here referring to buildable land or land with buildings on it already, as well as agricultural or forestry land. Value is assessed to each such property by the Finanzamt. The use of the land and the state in which the land is located then determines the tax rate applicable, which currently is between 0.26% and 1.0%. The tax payable is determined by multiplying the value that has been determined by the Finanzamt with the applicable tax rate, and then the result also multiplied by the so-called municipal multiplier. This municipal multiplier is determined by the city or district in which the property itself is located. This tax is currently undergoing huge reforms which will be effective from the 2025 tax year. In the event of you receiving a gift or inheriting assets, the tax payable depends on the relationship between the parties involved and the value of the gift or inheritance itself. The relationship is used to determine the inheritance tax class. Yes, there is an inheritance tax class, which is then used in combination with the inheritance or gift value to determine the applicable tax rate as shown here. The tax rate currently is between 7 and it goes all the way up to 50%. If you were self-employed, obviously, like I mentioned earlier, there is also the Gewerbesteuer, the local business tax, and the Umsatzsteuer or Mehrwertsteuer, the value-added tax. The local business tax is arguably the most important source of income for towns and cities really in Germany. Currently, that tax is levied on the profit of the business at 3.5%, the result of which is then multiplied by what we call a municipal multiplier, a concept I have mentioned earlier on. The value-added tax is 19% for most goods and services, the vast majority. However, for certain items like groceries, this has been reduced to 7%. If you are self-employed, it is advisable and it absolutely makes sense for you to make sure that when you are billing your clients, you include the 19% VAT separately from what you yourself are charging. If you do not do that in the future, you will have to pay this VAT from what you would have wanted to keep for yourself. Yeah. Phew, I know that's a lot of information that we've just gone through. But at the same time, it is a simplified overview, really. If somebody were to take a pen and paper to critique what I've just done, there will be a lot of information that may not necessarily be here. That's why I always say it's important to consult a professional tax advisor for advice tailored towards your particular situation. All right, it's time for a fun fact break. Did you know that the average single worker in Germany pays about half of their income in taxes and social security contributions? Now that's what I call a tax bite. The so-called tax wedge, as calculated by the OECD for 2022, is 47.8% for the average single worker and 32.9% for the average married worker with 2 children. Finally, let's not forget about tax returns. Did you know that more than 9 million tax returns are filed electronically in Germany each year? Not to talk about those done by tax advisors for people. We will cover more about this in a subsequent episode. But the bottom line is this: filing your taxes is your opportunity to declare your income, claim your deductions, and ensure that you're not paying more taxes than you should. In the end, taxes are a part of life. They fund public services, infrastructure, and many other things we often take for granted. Remember, taxes may seem complicated, but once you understand the basics, really, it gets easier with time. Now is the time for action on your side. Get in touch with me for detailed discussions on how you can optimize your finances to avoid paying unnecessary taxes. That's it for today's journey into German taxes. Thanks for joining us today. If you found this video helpful, you know what to do. Give it a thumbs up, subscribe for more tax knowledge, more finance knowledge, and don't forget to hit the notification bell. Tschüss und bis zum nächsten Mal.